Support and resistance are central to technical analysis. In fact, they are deemed so important, traders often base their entire strategy on them. But what exactly are these levels and why do they appear? Support and resistance levels are intrinsically linked to supply and demand. When demand is higher than supply, prices tend to rise as there are more buyers than sellers. Equally, there is more supply than demand. Prices tend to fall as the opposite is true. Support and resistance act as turning points. For example, in an upward trending market, when the price of an asset rises only to then pull back, the highest point reached is considered resistance. The market will have difficulty breaking above this level, as it indicates a surplus of sellers. In other words, at a resistance level, selling is expected to emerge that prevents further price increases. Similarly, during the pullback, the lowest point reached is considered support. The price will have an equally hard time breaking below this level, as it indicates a surplus of buyers. Meaning, at a support level, buying is expected to emerge that prevents further price decreases. Support and resistance levels often appear at psychologically important price levels, such as round numbers or historical highs and lows. But how do traders plot support and resistance levels on their charts? Well, it's relatively straightforward. By analyzing the charts, traders can identify price points the market has struggled to break through. The more times prices bounce off these levels, the stronger support or resistance is considered to be. Always remember though, support and resistance levels are not exact numbers. The market is unlikely to hit the same price level repeatedly before rebounding. As such, it is better to consider them as price zones. And what happens when support or resistance levels are broken? Well, the strength of the following trend is often determined by the strength of the levels themselves. If a level held through multiple breakthrough attempts, it's more likely the trend will be strong. It's also worth keeping an eye on previously broken levels. A broken resistance level can sometimes act as support for subsequent price movements. Similarly, if the price breaks through support, that level can later become resistance. To learn more about Forex, visit trading.com.